Good morning. It is a wonderful Wednesday, this fall day of October 8th, 2025. I'm Zach Howard. I'm back with another morning market update. Thank you for tuning in to my channel as I continue to cover markets through the theme of debasement of fiat currencies. As we see all-time highs in pretty much everything here. U.S. equity markets, precious metals, which are the inverse of fiat currencies, and even some commodities now catching a big bid here into Q4. Let's look at a few charts and do an overview of what I'm looking at in my notebook. I take a daily notebook of price action, themes that really resonate with where the macro regime is. And what I'm seeing in the U.S. bond yields, particularly the U.S. 10 and 2-year yield, steepening in the yield curve, implying lower yields, lower lows, lower highs, off the backdrop of that continuing government shutdown. However, we are seeing a stronger DXY, which is a result of weaker euro and a weaker Japanese yen, the two biggest components of that DXY US dollar index. We got Europe, the biggest economy there, Germany, slowing, big time rate of change, potentially in recession here in Q4. Poor German 5-year bond auction earlier this week. One of the weakest bond auctions of the strongest countries in Germany, not setting up a good sign for what's on board there. More dovishness to come in Germany, alongside a dovish prime minister now elected in Japan. Weaker fiat currencies about Europe and Japan, which is the key theme around the world. Also in the notebook today, we got the two mega cap names, Amazon and Meta, which have been bullish trend and really strong signal, now back to bearish trend. Something to keep an eye on. And Tesla yesterday, which was one of the strongest components of that, Mag 7 names, just broke bullish trade, but still bullish trend. If we get a spike of volatility, Tesla's my favorite short in the market. It is the ultimate meme coin. It is not a stock. It is the ultimate behavior mechanism for what we are experiencing in all this backdrop. If you ask me, it's so interesting. And everybody's captivated by the persona of the genius that is Elon Musk. Yes, he is a genius. He's the greatest one to ever play the fiat game, if you ask me. Looking at here a chart of the U.S. equity market still in this risk on mode. Great work that Tier 1 Alpha does. Really lining up flows, volatility regimes, and how the market really is driven by machines. And machines work off math. They do not do thinking. They're not like humans, which have behavioral inconsistencies that make mistakes. But looking through these regimes with these greenish lines, every time we these peaks and then they eventually correct, they're going to correct hard. That doesn't happen tomorrow. It doesn't happen even next month. But we know eventually we're going to get a correction. We are still in this bullish mechanism because of volatility. When you have the 1 month, the blue line below the 3-month realized volatility, this is part of Tier 1's work. That is risk on until it's not. But yesterday, like I say, a couple of those mega cap names have started to show weakness, and we're first time in a couple of weeks there now, lower lows, lower highs in U.S. equity indexes. But the U.S. market is of national security now for the empire as the U.S. They had to keep this game going because it's so big. It's the Jenga game. Concentration of the wealth is in stocks. It is not on the main street of USA. Looking at these charts here, we are in the financialization of everything. This didn't happen overnight. It's been building for a while, ever since 2009, 2010, particularly 2020. This is the theme. Okay, it's all facade of monetary illusions through that fiat backdrop. And when this breaks, they are just going to have to print even more fiat at a faster pace. Talking about the AI themes and how there's so much funky business. No other way to say it. You can say a lot worse what's going on here with some of these names, NVIDIA, AI, OpenAI, and overnight, even Elon getting in on the game with NVIDIA, going to give up some percentage, some upside equity if he's taking money now from NVIDIA for some of his chips through his Grok. It was his AI company there that's private. The build out in CapEx is continuing to be a reality, but at what result? Is there actually going to be profits on the other side of this massive build out? These mega companies have now chosen to do CapEx as opposed to buying back their stocks with all the excess cash flow in those 7 names. But where is the end result for shareholders? Not the end result for humanity and society using these technologies, besides making memes and slideshow presentations like this here today. How much is being overbuilt? How much is being baked in the cake? And we look through the lens of rates, through those data centers. The performance here this year has been very poor. These data centers are not like your traditional industrial warehouse, even multifamily type REIT that once it's constructed, besides minor repairs and maintenance annually, there's not a lot of CapEx. These data centers got to keep upgrading not only the chips that inside the data centers, but the cooling systems had to continue to evolve every 2 to 4 years, which I talked about in one of my presentations earlier on the depreciation expectations. It's just not reality. And they are not like a traditional REIT. They are extremely intense CapEx business. And we're not seeing the returns. If you just want to have passive income, they are not it. But into the frothiness of it all, we are seeing some crazy stuff happening inside the market, reminiscent of 1990s. Quantum computing is a real theme and is a real technology that's going to be present going forward. There's a real demand. Now, this is a cool company. One of my friends, Mark Riccarelli, put me onto back in June. Started doing some research on it back then. I was going to actually put up a presentation on YouTube. I didn't back in June. I was looking at it. It was a Canadian listed company at the time, $4. Earlier in the week, it was $11. Yesterday, this thing went up 51%. And here pre-open, it's up again. It now trades on the NASDAQ, up 6,000% in a year. Real cool company. The founder is a Switzerland billionaire guy. He owns like 34% of the company. But when I see parabolic moves like this, I'm like, man, I had a small position. I took like half of it off because this is just getting crazy. And looking through that backdrop, it is true to fiat. It is true to failing fiat, okay? Whether it's the Canadian dollar, the Japanese dollar, or the US dollar, we measure that through the price of gold in different currencies. They're all going up the same, up and to the right. These charts are like parabolic meme stocks, altcoins, but they are fiat currencies. Fiat currencies are failing 50% plus in a year here, guys. This is what's happening. And it's like a long-term gold bull, me. Been studying gold for 6-7 years. Love it. It's truth serum for all this fake fiat world. This is a bit scary. How fast gold is moving. How fast the fiat is failing. And I don't think many people are paying attention. $4,000 round number. Bank reserves into the theme of it all. What gold was potentially sniffing out. The fiat printing machine is coming again with a vengeance in the future, in 2026. Whether that's through a slowdown or just through a liquidity issue with all this fiat debasement and the debt monetization of it all, it has to continue to go. The game has to go on no matter what. This is a chart. This guy conks. He is deep in the weeds and this plumbing of the U.S. Treasury and banking system. Some of his stuff is way over my pay grade, but he knows it inside out and he does some great charts. This is a chart of U.S. bank reserves, roughly just below $3 trillion currently, but week over week, failing about 1.22%. It keeps falling down. We're going to get to a critical threshold where the quantitative tightening of the Federal Reserve switches back to U.S. Federal Reserve easing, quantitative easing. You think back to 2021 during COVID, and they just stimulated printing money like crazy. That's why Bitcoin, that's why gold is potentially stiffing out. The overnight reverse repo of the Feds continues to come down as well, as there is not as attractive returns in money market funds with interest rates falling. Funds continue to flow out of that space. So we're at this threshold here now, 2.9 trillion. Some Fed officials after saying when it gets to 2.7 trillion, they're going to reverse course. Others saying the real threshold is 2.2 trillion. That's you're going to see real stress in the U.S. banking system. When can we expect this? Well, if we're saying 2.7 is the number, probably by February based on this continued decline week over week. If not, next summer, next fall. Bottom line is with this trend, the money printer has to come back on eventually, okay? This has to keep coming. That is what gold, that is what the fiat debasement of everything in all-time highs is screaming here. That's the theme. That's what we're going to continue to talk about until it's not a reality. And I don't see it not being a reality. So many vibes like Weimar continue to show up out there, unfortunately. But for now, we'll just continue to play the game. I love the game. Let's go. Have a good one. See you soon.